Hi guys! In this video I will show you how to use Heikin Ashi Candles and which powerful tool they can be for your trading and how they can help you to improve your hit rate. So stay on tuned, we will start right away. No matter which strategy you are trading, if you're doing trend trading or reversal trading, maybe also breakout trading and so on. What most clients tell me what their biggest problem is when they start trading is the timing. Because support and resistance areas are not a line usually, they're more of an area. And that's really difficult for a beginner in trading to deal with because there are no exact rules. You have to get a view for the market. You have to learn how the market is moving and how the market is reacting. In short, you have to learn to analyze the market. And in this video, I'm going to show you a tool which really can help you doing so. Let's take a look at the chart. We're in the British pound US dollar in the 3-hour chart and using regular candles right now. And you see the market is making relatively clear movements, but you see there's always a change of green to red and red to green. So it's kind of hard if you're really looking for an entry to tell when to enter. Therefore, we will switch now to the Heikin Ashi Candles. And you see the movements get a lot clearer here. So there's a clear upwards movement followed by a downwards movement, upwards movement. There's also phases where the market is without any clear direction. Of course, that's the price action that is giving the direction. Of course, the Heikin Ashi candles don't change the market phase. They just make the chart easier to read and easier to analyze. Let's take a look at an example. We have a support and resistance area over here. This area is working as support and resistance in this whole area. So it's just not a line, it's an area. And the market is coming into this area here, then turning. Green upwards candles are building, then followed by a red candle, which is directly at the edge of the resistance area, which can result into indecision at the trader whether to enter the trade or not. But if we have a look at the Heikin Ashi candles now, here in the Heikin Ashi chart, the swings are a lot cleaner. So you see when the market is coming into this support and resistance area, the reversal zone, the Heikin Ashi candles are turning from red to green right at this point. So when the candles turn green, you can either enter the trade right away and go long, or you can take this analysis and go down to a smaller time frame to confirm your analysis there and find a reason for entry there. So it's just depending on your strategy. But you see the Heikin Ashi candles are making the charts more readable and trends easier to analyze. So you can use this as part of your strategy and find better entries. And also with the better entries, you can raise your hit rate. The better your analysis, the better the trade output will be. So let's take a look at a second example. We have our last low here and our support and resistance area, or our reversal zone here, built by those recent price action here. So this is the zone, and you see the market is moving here in this area, but where to find an entry now? Let's have a look at the Heikin Ashi candles. I will zoom in a little bit, and you see here there's also indecision in the market. The Heikin Ashi candles can't change this, but when they leave the reversal zone, this is the moment where the Heikin Ashi candles show a clear movement. But as you see, if you would have entered here already, totally fine if you put your stop loss far enough away. I've drawn in a line here. This is the support and resistance area from this price action here, and I would place my stop loss right above that one to make sure you don't get knocked out by spikes up, which probably would find resistance in this line here. So you see the bodies also stayed in the reversal zone. So here there's momentum down coming in, and the latest point where you should look for an entry. Either you enter here by leaving the reversal zone if you haven't entered before, or you use this chance to go to a smaller time frame and look for a reason for entry there. You always have to find your own way of trading and your own strategy you feel comfortable with, but especially for beginners, I would always recommend to do swing trading on higher time frames, like the 3-hour time frame we used here, for example, and not go down to the smaller time frames like the 50-minute or even the 1-minute chart. The higher time frames give you the possibility to trade in a smoother way, because the price action here isn't as fast as it is in the smaller time frames. It gives you enough time to do your analysis and to confirm your analysis before entering a trade, and the situation or the trade opportunity is still there. The smaller time frames are just moving faster concerning your trading setup. So this is it, the end of this video. If you enjoyed it, please leave me a thumb up, and if you have any questions or suggestions concerning this video, just write in the comments below. Plus, I will also put in the section below this video a link to my new Telegram group. I've collected the main problems from my clients, and in this group I want to go deeper into those. It's a group especially for you, and I will go deeper into analyses and trade setups, and this is totally for free for you. So come on now and have a look into there, and I will meet you there. Bye bye.